Hi. So today, since the market is going up and we have a fantastic stock rally and Dow Jones is on a record high, people get too excited, I think, and you should have some rules for your investments. So I have 8 ideas for you how to stay calm and not to get too excited. So what I would suggest is first you should still look out for cheap valuations, PE ratios, book price to book value, and how much is you should compare the market cap with the revenues your company makes every year. So everything should be solid. You should watch out not to pay too much in such a rally. People get very quickly excited, and that's a little dangerous in a situation like we have right now. A boom is you should be careful with your feelings, and so what I would also recommend is you should look out, of course, for the second thing, rather for quality than for complicated companies that have some problems. A turnaround does not happen always. If you invest in a turnaround, you have a high risk that it doesn't go well. Like J.C. Penney has some issues. We don't know if they can deal with it, if they can make the turnaround happen or not. It's a kind of a risky thing, that stock. So I rather would invest into a rock solid stock than into a turnaround stock. It can happen, but a turnaround can happen, but there is no need to. So it's a little bit. Turnaround stocks are cheaper based on valuations, and they have a larger opportunity if it goes well. But don't forget about the risk. The third thing is, still, even if the market is going to go up and the stocks are rising, the prices go up, everybody's happy and excited, you should be still patient and you shouldn't be too hectic in your actions. I would still hold to your companies, to great companies. There will be a next war, there will be a next crisis, there will be a next problem and the next whatever election in some country like Italy, and people will be still again worried the stock market will go down 20% or 30%. Worst case, it goes down several times a year, in a century, 50%. So the buy and hold is great. Don't be hectic. Even in a boom market, I would stay invested. And because activity hurts in most cases. It's like a tree that grows or a turtle. It's slowly, steadily. You should grow your assets. And the fourth thing I would watch out is you don't have to be genius. There's no crazy formula necessary. It's just common sense. Invest in great stocks and hold them for the long run. Reinvest the dividends, cash in the dividends, and Albert Einstein wasn't a great investor, or Sir Isaac Newton. They failed on the stock market. They invested terribly. So you don't have to be really super smart. It's just common sense. That's all what you need. Fifth is I would still keep, even in a boom market, some cash. Cash on a CD. You never know. Personally, you can get sick, you can get unemployed. Some people recommend to hold for the next 3 to 6 months an emergency fund. I think that's a good idea. Maybe you can hold a little bit even more than that. You never know. There's an accident or whatever happens. You should be always liquid, even in a boom, even in a rally. Also in a rally, it's important to get to what I said. Don't touch any credits. I would avoid loans. Even they are cheap right now, the interest rates are low, but I would not buy stocks on credit, and someday your stocks go down and then you have a margin call, you can get into big trouble. The seventh step is I would buy boring stocks rather than penny stocks or some hot but boiling, interesting little companies, I would rather buy a large cap, a blue chip, a boring everyday business that is in your household, the things you like, you consume yourself. I think that is very great. I don't know, like a paint producer, clothes, food producer, energy oil company, your your cable TV company, or the things you use every day, and especially those, of course, you're happy with, and those you can find in the Dow Jones 30, in the S&P 500. The best stocks there are usually great companies. The eighth thing I would watch out is, don't be too greedy in a boom market. In a boom market, people get crazy. The feelings go crazy. They go in the boom market. They go like in a grocery store. They go there shopping when the prices go up. That's what they do in the stock market. It's like a little silly. And on the stock market, they walk away when the whole supermarket is a bargain. When all the products are super cheap, no one goes there shopping. It's crazy. Now everyone goes in the supermarket right after they have increased the prices for all their products. So you should be very careful. Don't be greedy. Just think that 10% a year, what the market makes average, is great, and you shouldn't go for 1,000% for 1 or 2 years. Penny stocks are very dangerous. And the risk of a failure, of a bankruptcy with a penny stock is enormous, and people forget about that all the time. Okay, that's all what I have for today. Bye.